The US Fed holds interest rates steady but still sees 2 rate cuts coming this year. The central bank also sees higher inflation and slower US economic growth due to uncertainties around the Trump tariffs. Wall Street gains after the Fed keeps interest rates unchanged. The Dow jumps nearly 400 points while the S&P 500 and the Nasdaq gain over 1% each. All three benchmarks, though, close off the highs of the day. Asian markets are mixed after the Fed rate decision from overnight. China's central bank also follows in keeping interest rates unchanged as tariff threats pressure the yuan. The GIFT Nifty is indicating a gap up start for our own markets. Crude oil prices have edged higher after US government data showed a draw in fuel inventories. Gold continues to scale fresh record highs after the Fed kept interest rates unchanged. And Vedanta's Anil Agarwal promises to reduce debt by $3.5 billion by 2027 and says that they are ready to exit the steel business, but at the right price. Agarwal also vowed that professional management will run the companies after the proposed demerger and not the family. Good morning, you're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. After the all-important Fed decision overnight, we will be reacting to the same this morning. Let us now take a look at how the Asian markets are reacting to that, though. The big one, of course, the Japanese markets are shut today, so there'll be no trading in cash treasuries across the Asia-Pacific, so no cues coming from there. But it's a mixed picture across for the rest of the Asian markets. The Hang Seng is down 1.5%, some profit booking after the relentless rally that we've seen over the first 2.5 months of the year. The Taiwanese index, though, trading with gains, of course, ahead of their own central bank rate decision in just a few minutes from now. China's central bank has kept interest rates unchanged, which means that the markets are reacting to that. The Shanghai Composite is down about 0.5%, so no major moves coming from there as well. The Kospi 2 trading with gains of around 0.5%. So it's a mixed picture that is emerging from the Asia Pacific after the Fed decision. Pull up the GIFT Nifty. That will tell you how our own markets are likely to start off. And after a strong week that we have had so far, the GIFT Nifty is suggesting another gap up start for our own markets, and that is likely to be around the 23,000 mark for the Nifty. Keep an eye out on that. For now, the implied open suggesting a 93-point uptick for our own markets. Over to Wall Street then, the indices had a good day following the Fed's decision to keep interest rates unchanged. The Dow gained nearly 400 points. At one point was up 600 points. The S&P 500 and the Nasdaq both gained between 1% to 1.5%. The Fed, what the street liked was the fact that the Fed stuck to their forecast for 2 rate cuts in 2025. However, they see higher inflation and a slower U.S. economy due to uncertainties tied to the Trump tariffs. CNBC Steve Leisman has the fine print of the Fed decision.
It kept rates unchanged, 4.25% to 4.5% as expected, and that's despite concerns about higher prices coming from tariffs. It emphasized the uncertainty in the outlook from these changing policies from the Trump administration, but it still forecast rate cuts this year.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate.
Notice no talk of hikes there. Fed officials in their projections raising their core inflation outlook this year by 0.3 to 2.8, most of which is linked to higher tariffs. They lowered the growth forecast by 0.4. That's down to 1.7%, exactly, by the way, matching the CNBC Fed survey. And yet it kept that forecast for 2 rate cuts this year, with the median forecast seeing a 3.9 by the end of the year from the 4.37 now. The takeaway is that Powell made clear he would be watching closely to see if tariff raised prices only one time or became a broader inflation problem. He's pretty cool about it. He basically said he would not be taking any preemptive action. And Mike, I just want to get on a little news right here that I got while I was talking there. Megan Casella, our ace Washington reporter, has confirmed a Washington Post report where we found that one White House official tells me the total value of goods hit with tariffs on April 2nd could be, quote, in the trillions, but nothing is for sure yet. So there's this idea that there is, as you know, a massive additional wave of tariffs coming. Powell knows about it, but he was pretty cool in the face of it.
The Fed policy decision now coming in, all eyes were on Chairman Jerome Powell's comments on tariffs and its effect on inflation. Listen in.
You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
And let us also listen into some reactions to the Fed's decision coming in from market experts and economists.
At the margin, he was probably a bit more dismissive of the increase in inflation expectations that we've seen. It will take a while. Now, of course, we've got April 2nd. We've got the announcement. We'll see what happens in terms of tariffs, how they calculate the reciprocal tariffs in particular, because there's a big bid ask on what you can do if you just look at tariffs that our trading partners impose on us and compare that with U.S. tariffs. That difference is very small. But if you say VAT is also tariff-like, that would imply a very big increase. So we'll learn quite a lot over the next month. But you're right, if you take all the other aspects of policy, that's going to take a long time, especially because fiscal policy is on a much slower path. And so that would suggest, it can still take a while before they actually get to cuts.
The truth is the economy, traders, consumers, businesses, we're all in wait-and-see mode here on what administration policies turn out to be in the end on tariffs, on government cutbacks, on immigration, and on fiscal policy for 2026. I think the one thing I would sort of take issue with here is I actually think economic growth could be slower than 1.7% this year, fourth quarter over fourth quarter. We're seeing a good deal of weakness in the first quarter numbers, which isn't really reflected in their statement. So that's the one place I'd be a little bit different from the Fed on here. But I don't blame them for trying to be cautious here, because they really have to wait to see what the other side of Washington does.
Reactions coming into the Fed interest rate decision from overnight. That's, of course, the big story of the morning. We take a short break. On the other side, we'll tell you how will all of these overnight updates will impact our own markets. Stay tuned. We'll be right back. Welcome back, and our research team now joins in to tell you how will all of the overnight cues impact our own markets with the trade setup, the stocks that are likely to be in the news today, and of course the setup on the FNO side of things as well. Firstly, Vamakshi joins in to get all the market cues for the day. Vamakshi, good morning. It looks like the Fed cheer seems to be rubbing off on Dalal Street as well.
Well, absolutely, Hormaz. Let's first look at the session that took place yesterday. Keep in mind that Indian markets continued to gain for the third straight session. Nifty closed about the 22,900 mark, while the sensex rose to 75,449. The Nifty Bank too saw an uptick of 0.8%, and in fact, it has gained for the fifth consecutive session. The advance decline ratio was sharply and very strongly in favor of the advances. The broader markets continued to outperform, with the Nifty mid-cap as well as the small-cap index posting gains of 2.5%. As far as sectoral indices are concerned, barring IT and FMCG, all the sectoral indices closed in the green. Realty as well as PSU banks were some of the top sectoral gainers. As far as some other themes are concerned, there were defense stocks, some sugar stocks, as well as some capital market plays that were in focus yesterday. As far as the US markets are concerned, the Fed has held the interest rate steady. They still see 2 cuts coming in this year, and Wall Street, all 3 indices closed in the green, so it's a positive handover coming in from there. As far as the trading session today is concerned, we'll be keeping an eye out on Bank of England's interest rate decision. 2 important board meetings scheduled today. Manappuram Finance as well as Indian Bank, both of them will be considering fundraising. As far as IPO is concerned, there's a new one that is hitting the Dalal Street after a dry spell. Grand Continent Hotels IPO opens today. The Nifty, important levels to watch out for. On the upside is the 23,000 mark. That may act as a resistance. On the downside is the 22,600 to 22,700 that could act as a support. As of now, the Gift Nifty is indicating a gap up opening, but we'll have to wait and watch whether or not this sustains.
Well, hopefully the fourth straight day in the offing. Of course, today the weekly options expiry as well. So keep an eye out on that. Vamakshi, thank you for that update. Over to Vinny now. List out the stocks you need to keep an eye out for. Vinny, good morning. What's on your list?
Good morning. So keeping an eye out on Adani Enterprises as well as cable stocks like Polycab and KEI Industries. So why Adani Enterprises? The Kutch Copper, which is a 100% subsidiary of Adani Enterprises, has announced that JV with Parnitha Ventures Private Limited for cables and wires segment. So keep an eye out on this one. This was some bit of it was known. So today also we'll keep an eye out on all these cable stocks as well as Adani Enterprises. IOB, that's in focus. Now Indian Overseas Bank has launched a QIP and they'll be raising 2,000 crores. When you're looking at it in terms of the issue price, that's at around 40.57 rupees, which is a discount of 7.3% of yesterday's closing price as well as 5% discount of the floor price as they've announced. So keep an eye out on IOB. Avenue Supermart companies to invest 175 crore rupees in its e-commerce arm DMart Ready. Now this investment is mainly going to be through equity share subscription that we'll watch out for, and this is mainly for supporting DMart Ready's operations, working capital as well as expansion strategy and plans of the company. Hyundai Motor, keep an eye out on that one because the company has announced price hikes and increases of 3% for its vehicles with effect from April 2025. Dhani Services, another one that we're keeping an eye out on. They've signed an MOU, 5.37 acres of land parcel in Gurgaon is what they're looking to develop as a real estate project, revenue potential of around 12,000 crore rupees. Also, Wipro is something that we should watch out for. The company has announced its new agentic AI services with NVIDIA. And this is AI enterprises for the government and enterprise around the world. So keep an eye out on that. Canfin Home CFO has been relieved from his services on March 19th. We have a new CFO, interim CFO, who is Prashant Joshi, who's joining in with us with effect from today. And lastly, Nabha Singhania has resigned as a non-executive director of Raymond with effect from yesterday. So keep an eye out on that.
So the reason why Raymond was up in a couple of sessions as well. Vinny, thanks a lot for that update. Sudarshan finally joins in with cues from the FNO space. Sudarshan, good morning. What's the FNO data indicating? Finally 23,000 today?
Good morning, Hormaz. So we are all set. Nifty is all set to open above 23,000 if we go by GIFT Nifty, which is currently up more than 100 points. But talking about yesterday's move, we saw a healthy gain for all the frontline indices, especially broader markets that helped market breadth, which was completely in favor of advances. We saw advance decline ratio was at 5:1 at the close. On the flows front, yesterday we saw FI selling around 1,100 crore, but I don't think there is much to worry on that front as well. DIs have bought more than rupees 2,100 crore. Look at the data on the derivative part. Index futures, they have bought more than almost rupees 2,000 crore. In the index options, buying figure was more than rupees 22,000 crore. In the stock futures, again, they have bought almost rupees 500 crore. And they have added long positions of more than 9,100 contracts. At the same time, they have reduced short positions by 3,560 contracts. And with this, FI longs would now increase to 26%, which is highest in last 3 months. On the option front, 23,100 call has seen addition of almost 47 lakh shares, while 22,850 call has shed more than 41 lakh shares. On the put side, 22,900 put has seen addition of nearly 56 lakh shares, and 22,800 put has seen addition of almost 30 lakh shares. Support for Nifty is now seen somewhere around 22,600, and resistance has moved higher to 23,200. Two stocks that have come out of the ban are BSE and Manappuram Finance. Manappuram Finance especially because it has come out of the ban ahead of the board meet, and stocks that remain in the ban are IndusInd Bank, SAIL and Hindustan Copper.
Keep an eye out on Manappuram in today's session as well. Sudarshan, thanks a lot for that. On to another development then. Ola Electric faces a fresh set of issues now with the Ministry of Heavy Industry seeking details on the sales data and some inspections. Parikshit is joining in with more on that. Parikshit, good morning. What are you picking up?
Well, troubles and regulatory heat for Ola Electric is only increasing and mounting day by day. The latest that we can share with our viewers is that the Ministry of Heavy Industries, which is the nodal body for the automotive industry, also which is the body for PLI scheme and the FAME scheme and the PM E-Drive scheme, is now looking at why there is a mismatch between the data that Ola Electric is reporting publicly, around 25,000 scooters sold in February versus 8,600 that have been registered in Vahan. So they've sought details from Ola Electric to explain this. Having said that, Ola is also facing inspection and raids from RTO authorities across different states. We believe that Ola Electric stores in Punjab were shut down because they didn't have a valid trade certificate. Following that, there were extensive raids across 30 to 36 locations in Maharashtra, in Mumbai, Pune, between 18th and 19th of March, whereby around 34 to 36 scooters were seized as well because they did not have valid registrations or papers for being in the store. Similar inspections have been carried out in Jabalpur, and notices have been sent to Ola Electric to explain why there were scooters, at least 6 or 7 scooters, in the store in Jabalpur without registration, without a valid trade certificate as well. So many questions there for Ola. We've been sending a lot of queries to the company as well, but so far there has been no formal response.
Parikshit, thanks a lot for that update. Take a short break here on Power Breakfast. We get you cues from the commodities market on the other side. Stay tuned. Welcome back. Now, the US Fed kept interest rates steady, but the bigger takeaway was that they maintained that there will still be 2 rate cuts this year. And President Donald Trump on Truth Social has reacted to the Fed decision. And he wrote that the Fed would be much better off cutting rates as US tariffs start to transition their way into the economy. He asked the Fed to do the right thing. And he said that the 2nd of April is going to be Liberation Day in America. Mind you, the 2nd of April is when the reciprocal tariffs will kick in across the board. So we'll keep an eye out on that. In further updates for Donald Trump, he also dialed Ukrainian President Volodymyr Zelensky after his 90-minute phone call with Vladimir Putin the day before. With more Trump-related developments, we have Diya Epen wrapping up on our latest special segment, Trump Watch.
In a promising development, US President Donald Trump said he held a very good call on Wednesday with Ukrainian counterpart Volodymyr Zelensky and that efforts toward negotiating a ceasefire are very much on track. He also told Zelensky that the United States could own and run Ukraine's nuclear power plants as part of his latest bid to secure a ceasefire. This comes a day after Putin told Trump he'd be willing to limit attacks on Ukraine's energy infrastructure as a first step, but did not agree to the full ceasefire that the US was pushing for. Turning to legal matters, the Trump administration has appealed a judge's order requiring Elon Musk and his Department of Government Efficiency to comply with evidence demands from Democratic state officials accusing the billionaire of exercising unconstitutional power across the US government. They argue that the lower court judge's unusual and highly invasive order raises grievous separation of power concerns by requiring a presidential advisor and the White House to turn over information about their activities. Moving on, President Donald Trump is expected to sign an executive action later today, formally asking officials to take steps to dismantle the Department of Education and return education authority to the states. This comes as part of the latest effort to reduce the size of the federal government and its workforce. The Trump administration has also granted Global LNG Inc. conditional approval to export natural gas from a plant facility in Louisiana that it stalled under former President Joe Biden. Energy Secretary Chris Wright authorized the exports from the company's CP2 project on Wednesday, conveying in a statement that the measure was critical to restoring energy dominance. That's all the overnight action from the United States. Back to you, Hormaz.
Diya, thanks a lot for that update. Some important reactions also coming in to the developments on the Russia and Ukraine war as well. Important to keep an eye out on the Asian markets though. Although Japanese markets are shut, the Hang Seng has seen some bit of recovery from the lows of the day, of the lows of the session. Now it was down 1.5% when we started the show off. It's currently down 1%. The Taiwanese index still holding on to gains of around about 1.33%. The Kospi still gaining around 0.5%. The Shanghai Composite is down 0.25%. And all of these markets are reacting to the fact that the Chinese central bank has also followed the US in keeping interest rates unchanged. And that is why the reaction in these markets. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Another day, another record high for gold.
Oh, absolutely. And the markets are reacting to the U.S. Fed and China as well. So, yes, gold is now at a record highs above $3,050 an ounce. The U.S. Fed has projected slower growth and higher inflation. And while Powell said that it's not in a hurry to adjust borrowing costs and will wait for greater clarity before acting, but it also has signaled cutting rates by 0.5% by end of this year. And that's exactly has been the fuel for the fire when it comes to gold. But it's not just gold, Hormuz. Take a look at copper prices. 10-month highs on this one. We are up by 28% for the copper prices in 2015 right now. And we also have seen the crude oil prices edge higher as the U.S. crude inventories have continued to decline. Israel resumes ground operations in Gaza, and many of the geopolitical tensions are back. So tangible commodities, all of them doing well.
Indeed, copper prices too at a multi-month high, and gold prices, of course, making new records. Manisha, thanks a lot for that. And with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.